and welcome. You're watching this Diwali special programming on ET Now. I'm Anisha Jain. Well, as we head into summer 2080, here's wishing you that this year your wealth multiplies, your investment grows, as well as your ventures thrive in summer 2080. And to help you to multiply this wealth, we have a plethora of guests joining us on the show to give you some of the stock ideas that you might want to keep on your radar. We'll be joined by technical experts Nooresh as well as Kunal, and on the fundamental side, Mr. Sanjeev Bhasin will be joining us on the show. Let's also welcome on board my colleagues Asesha, Sharad as well as Vamakshi, who have parsed through the multitude of Diwali picks that we have got from the brokerage houses. Guys, take it away. Tell us which are the top recommendations coming in from the brokerage houses now.
Well, yes, let's first start off with Raymond, and it is Motilal Oswal's pick this Diwali. They've maintained a buy rating and given a target price of almost 2,600 rupees per share, and they have highlighted that Raymond in the last 2 to 3 years has strengthened its leadership team as well as restructured its group. Demerger as well as the promoter's capital infusion has in turn led to strengthening of the balance sheet as well, and the company has a whole host of brands under it, which includes Raymond, Park Avenue, Color Plus, Ethnics, and they believe that they do plan to grow it through the asset-light franchisee model. So on the back of that, Raymond is definitely on Motilal Oswal's radar. They've given a buy rating and they see an upside potential of almost 40% from the current levels. Moving on to IDFC First Bank then, this is a recommendation that has come in from Anand Rathi. They have a buy rating, target price of 114 rupees per share, which actually implies an upside potential of almost 37%. They believe that the company has undergone the first phase of transformation from an infra financier to a granular retail lender. They believe the bank could post a credit card business break-even by almost FY25, and in fact they're expecting the bank to reach a return on equity of almost 13 to 15% and a return on asset of almost 1.4 to 1.5% by FY25. So given that, keep an eye out on IDFC First Bank. And lastly, let's also focus in on Tata Power, because that happens to be ITPI Capital's top pick. In fact, they've given it a buy rating, target price of almost 339 rupees per share, implying an upside potential from the current levels of almost 36%. Now, Tata Power, keep in mind, is India's most vertically integrated power company, and definitely it could benefit from the strong power demand. CGPL Mundra is also turning profitable, and that could resolve long pending concerns for Tata Power. Not just that, the company is aiming to move to a cleaner fuels, and they've already signed an MOU with the government of Maharashtra. So keep in mind all of those factors. We have ITPI Capital maintaining its buy rating on Tata Power.
In focus, we are having, of course, the two NBFCs which we'll be talking about, and Nirmal Bang's first call has come is Fusion Microfinance. The target price is roughly 820 rupees per share, indicating almost a 40% upside from the current levels. Now, of course, the important thing is this is India's second largest NBFC MFI, and also going ahead, the brokerage house is bullish, especially on the return ratios part, and they're expecting the ROA and the ROE to actually grow between 4.8% to 22% for financial year FY25. Also, apart from this, strong asset quality ratios are also there, which augurs well for the stock, and that is the first pick coming in from Nirmal Bang. The second pick, also coming from the same broking house, is 5-Star Business Finance, another NBFC, and a very different NBFC, because they are actually going ahead with the average ticket loan size of less than 5 lakh rupees. Now the target price is set at roughly 1100 rupees with an upside potential of more than 40%, and also they are serving mainly in the tier 3 to tier 6 towns. Importantly, also they will be serving the unbanked self-employed individuals, and a high earnings growth is also expected, roughly 30% CAGR over the next 2 years, and including the AUM numbers, if you look at it, that is also expected to grow 35%. So this is the second pick coming from Nirmal Bang, and the third pick is coming from Anand Rathi, and that company is Syrma SGS Tech, with a target price set of roughly 735 rupees per share and an upside potential of almost roughly 40%. It's expected that the revenue PAT expected to grow between 36 to 55% over the next 3 years as well, and the company itself is having a lot of industry tailwinds going ahead, especially in the capacity expansion part, and also foraying into newer segments such as the defense as well as the EV space. Now this is actually going to be a re-rating factor as well. So these are the 3 stock picks coming in from here.
So I'm going to start off with Dalmia Bharat, where Motilal Oswal has come out with a note where they've recommended a buy with a target price of 2,800, which indicates a nearly 35% premium from the current market price. They say company is benefiting from rising cement prices and rising cement demand, and hence they are bullish on this counter. They are anticipating nearly 11% volume growth on a CAGR basis over the period FY23 to 26, and for now they've given a 2,800 rupee target on Dalmia Bharat. Meanwhile, Birla Soft, it is IDBI Capital's high conviction buy idea with a target price of 781, indicating a premium of about 35% from the current market price. IDBI Capital says that company's ability to grow at about 3.5% on a sequential basis every quarter indicates that it is taking the right steps to turn around the business altogether. It is also betting big on artificial intelligence, and they expect revenue CAGR of about 10.5% and PAT CAGR of about 22% over the period FY23 to 26. So they've given a target price of 781 on Birla Soft. Lastly, recently listed candidate Vishnu Prakash R. Pungalia, where Nirmal Bang has recommended a buy with a target price of 262, indicating a 35% premium from the current market price. They say company is a small fish in a large pond. Large addressable market size is what it has in front of it. The company currently generates just about 1,000 crores revenue, but total addressable market stands at about 6 lakh crores. So on the back of huge potential that the company has, they've given a target price of 262, indicating a 35% premium from the current market price.
Okay, so that was the wrap as to what the fundamental ideas are from the brokerages. But let's now talk technicals, and as promised, we have Kunal Bothra as well as Nooresh Mirani in the house to talk to us about some of those fundamental picks. First up, gentlemen, happy Diwali. Thank you so much for being in ET Now studio.
Happy Diwali to you too, as well as all the viewers of ET Now.
Thanks so much for that. Let's start by discussing stocks right away. And let's talk about some of those large cap bets, because this year has been underperformance when it comes to the large cap names. But if we talk about a blue chip bounty for next year, Kunal, which name comes to mind?
See, I think I've been very bullish on a few of these select auto names. I think now it's time possibly that stocks like Maruti could make a comeback. So I think from the large cap space, I would look at Maruti as one of the potential candidates of a breakout. If you remember, I think in 2015 the stock made a high of 10,000 approximately, and after a gap of I think 5-7 years, the stock had retested this level of 10,000 plus mark. This is a very strong and a classical sign of a breakout for Maruti on the longer term basis, and I believe that this could be a start of a possibly strong multi-year and a mega uptrend for the stock.
Wow, multi-year, mega uptrend, those are the words to kind of hold on to. But Nooresh, what about you? Which is the blue chip bounty you are identifying for our viewers?
So I'll go a little contrarian here, go again with my favorite sector, public sector enterprises. So last year it was all about NTPC Power Grid. The new one on the block is ONGC. Now this has been an underperformer on various time frames, whether it is last 2 years, 5 years, even last 20 years. The stock has gone nowhere. But finally, the stock is setting up for a multi-year breakout. The stock was at 190.95 when crude hit 130 on Russia-Ukraine crisis. The stock was at 200, 210 back in 2017, 2018. And finally, the stock has come to those levels of 190.95. On a dividend adjusted chart, it's finally made a multi-year high. So technically, it looks like setting up for a major trend change, wherein the stock could surprise on the upside over the next 6 to 12 months or even in the short term. So I have a target price of 240 plus, could be much higher. Stop loss at 178 and then accumulate at current levels.
Okay, 240 thereabouts as far as ONGC goes, but this year definitely belonged to the broader market. So let's talk about whether the momentum will continue there or not, and if yes, which are the stocks that come to mind. Let's talk about the mid-cap marvels. Tell me your top bet there, Nooresh.
So that's a buy on Motilal Oswal Financial Services. So we've seen a good trend across the whole financial services pack. We've seen the exchanges do well, whether it is a BSE or a MCX. We've seen CDSL do well and other intermediaries do well, and other brokers also. And Motilal Oswal has been consolidating for a really long time, around that 1,000 mark. Not a great performer over the last few years. Finally looks like a major technical formation wherein it's a cup and handle formation. So I would expect this to slowly and steadily go up towards 1,300, 1,500 levels. Stop loss to be kept at 900.
Okay, so that's the bet coming in from financial services as far as the mid-cap sector is concerned. But PSU banking names, they have been the darlings of the stock in the year gone by, and you're expecting the momentum to continue, and that's why your mid-cap bet is from that sector?
Yeah, so tough sector, but I think an easy stock within the space. Canara Bank is something which I would pick. The PSU banking index, as you rightly mentioned, over the last, I think, 3 years from 2020 to 20 odd lows, I think has given returns of more than 3x, 3.5 odd x. Now, in that kind of a time span, Canara Bank has been one of the more consistent performers. So looks very formidable at current levels, and I would probably expect the stock to now head towards that 400 plus mark. So 470 as a target for Canara Bank, stop loss 340.
Okay, now let's talk about Chota Packet Bada Dhamaka. I love the ring of the name here, and small cap bets have been having that pataka run off late. What about the next year?
Now, in that regards, I would have, the first stock which I would have in this category would be Texmo Pipes. I think that's a very interesting name. The charts are quite interesting. The stock is forming what we classically call it as cup and handle kind of a breakout with a potential target closer to 180 and stop loss at 60.
Okay, so that's a Chota Packet Bada Dhamaka kind of, stock that Kunal is identifying for us. But what about you, Nooresh? What's the small cap bet?
So that would be a stock called Mukan Limited, a stock which has been listed from the 1990s, used to be part of some major indices back then. The stock has done nothing for the last so many years. The stock was last at 150 odd levels back in 2007, 2008. Corrected multiple times to 20 rupees over the last 10 years. And now finally the stock has crossed above the 150, 180 mark. So would keep a stop loss at 150, right, for a target price of 300 to 400 in the in the medium to long term.
Okay, so that's the short cap bet that we are talking about. But let's talk about the short-term bets as well. Sizzling Soothly, which can fire up very quickly and give you that big bang.
Well, yeah, so I'm picking up a slightly high beta sector, but within that, I think it's a formidable name, Godrej Properties. I think, real estate sector has done phenomenally well, more than 50% up so far as a sector this year. Godrej Properties has been more of a comeback story in that category. Would look out for targets in the range of 1950 and stop loss at 1690.
What about you, Nooresh? IndusInd Bank has had a solid run. You're still expecting some short-term gains there.
So the stock has finally broken out about that 1470, 1480 mark, which was tested almost 6 to 10 times over the last 3-4 months. But at the same time, if you look at the bank nifty, we've not made a new 52-week high. So a stop loss at 1450, target price of 1650 plus.
Okay, now let's talk about the cracker that I love the most, and that's the Fulgari. So the Fury Fulgari, what is that bet, Kunal?
So that will be L&T Finance. Now, a stock which has come out of major consolidations. It's a typically low beta stock, but over the last 1 year specifically, we've seen the beta nature change and significantly improve for L&T Finance. Now, so it's now becoming a typical mid-cap name which tends to participate, when the market gets into a breakout as well as the mid-cap index starts to outperform. You've seen over the recent charts also L&T Finance making a multi-year breakout, I think a 3-year or 4-year breakout for L&T Finance about that 140 mark. So looks interesting. Would look out for targets in the range of 165, stop loss 125.
Actually, let me ask you, which is your favorite cracker? I mean, I don't know whether you guys still burst crackers or not, but as kids, which were your favorite crackers?
So it used to be the Rassi bomb, which we used to call it the loudest one.
I should have imagined that coming. What about you?
Yeah, it used to be those Rassi bombs as well as those, multiple rockets.
The rockets that kind of go up and have multiple layers of gains that come in, I guess. Okay, no wonder there. But talk to us about your Fulgari idea.
So that's a stock which is again a stock which has done nothing for a long period of time. Even when the whole sector has done well, that is EIH Hotels, expecting a target price of 300, 350, stop loss to be kept at 210.
Okay, so EIH Hotels is the other one that we need to keep on your radar. And now let's talk about those rockets that Kunal used to like, those mega sparklers. What could be that multi-bagger idea when it comes to the stock markets?
See, it's an interesting name. It's Thomas Cook, which I would highlight. Now, it's not a well discussed stock, at least on the short term charts, but the stock has done exceptionally well this year, more than 100% return so far this year, and would expect the stock to maybe even head towards 300 plus over that kind of a time frame.
300 plus on Thomas Cook, that's the level to watch out for. But what about you, Nooresh? What's the multi-bagger idea?
So that's a difficult stock wherein the stock has been very volatile over long periods of time. That is Wockhardt Pharma. So it's a classical rounding bottom formation wherein a breakout would come once it sustains 260, 270. And when such a turnaround happens, it could surprise on the upside in a meaningful way. So out here, it's a risk reward bet wherein you risk some with a stop loss at 200 odd levels. But if it works out, it could be a doubler or more. So looking at a target price of 600 to 800 here.
Yeah, looking at the charts of this one, hasn't actually managed to return a lot this year, at least just around 8%. 5-year actually it's down 50%. Let's see if that turnaround happens and that high risk reward bet plays out or not. Those were the stock-specific ideas, but I can't let you go without talking about the indices, yeah? So tell me about the index level, Nifty. What is the target we should watch out for, somewhere 2080?
So I'll in fact go for Bank Nifty because sometime back when the markets were actually heading lower, we did an analysis that when the 5 months consecutive happens for Bank Nifty, post that after the 5 months of correction, the top which was made, that was in the month of July, around 46,000. We've seen after that 7 months, the Bank Nifty rises by at least 10% or more. So if you do the math, we should be looking at maybe Jan, Feb or March, Bank Nifty hitting 50,000 as well.
Wow, 50,000. We are right now at 44,000 thereabouts, less than that.
Less than 44,000.
Quite a bit of an upside on that one. But for Nifty itself, Nooresh, any targets in mind?
So I have a case wherein the index could be relatively range bound, given the fact that a lot of heavies are in a sideways range. You have 40% of the index not going anywhere. So overall the view is 18,500, 19,000 on the downside should hold on, and on the upside we go towards 21,000, 21,500.
Okay, so sideways move for the year, at least at the index level. Those stock-specific moves might be there. So let me just wrap up the conversation, gentlemen, by asking you your top sectoral bet. If somebody has to take, let's say, a sector bet this year, which index is best placed?
So one is auto, which comes up top in the radar in terms of a multi-year breakout in a lot of names and relative outperformance. So on dips, auto is what you want to look out for, and continue to like PSE as such.
Okay, PSCs and autos, you've already named banks, but apart from banks, what stands out? Real estate and pharma?
Exactly. Real estate is the one which I would probably pick other than PSU banks.
Okay, point taken. On that note, gentlemen, we let you go. Appreciate you joining us on ET Now. Thank you so much. Okay, viewers, but don't go anywhere. When we come back, we discuss the fundamental bets coming in from none other than Sanjeev Bhasin.